$37.9 billion. That is the total amount spent on tourism in Australia over the past 12 months. Domestic and international combined, up 10% year on year. If you own a pub, a motel, a budget accommodation property, a restaurant, a caravan park, or a coastal retreat, anywhere in Australia, that number is a backdrop to every conversation you should be having right now about the future of your business. I'm Con Tastzidis, a licensed commercial real estate agent and registered business broker in New South Wales. I specialise in helping hospitality and accommodation owners plan and execute their exits, whether it's 2 years away or 10 years away. I want to talk about what the latest tourism data actually means for owners who are thinking about timing a sale, because the answer is more nuanced than most people assume. A growing market is an asset, but only if you know how to use it. Let me give you the numbers first, because they deserve to be heard clearly. Tourism Research Australia released their June 2026 data dashboard recently, and it paints a genuinely strong picture. Total tourism spent across Australia, domestically and international combined, reached $197.9 billion over the last 12 months to March 2026. That's up 10% year on year. International tourism alone hit $40.9 billion, up 20.5%. That is not a rounding error. That is a sector in genuine recovery and growth. Short-term international visitors reached 9.2 million, up 10%. Visitors from China, up 20%. From Taiwan, 24%. The United Kingdom, up 15%. New Zealand remains their largest single source, marked at 1.45 million arrivals. Domestically, day trips are up 9%. Total domestic spend reached $157 billion, and the forward forecasts from Tourism Research Australia project continued growth. $207 billion in 2027, $216 billion in 2028, $224 billion in 2029, and $233 billion in 2030. Now here in New South Wales, specific number that I want every accommodation and hospitality owner in the state to hear. New South Wales recorded the largest increase in domestic spend of any Australian state, $1.9 billion, not nationally, the largest of any state. The sector supporting all of this is now employing 727,000 people across Australia, growing at 4% annually. Tourism GDP for 2024 to 2025 was $81.1 billion, up from $78.2 billion the year before. These are not fragile numbers. This is a sector with genuine structural momentum. So here is a question I get asked whenever the data looks this positive. Is it the right time to sell? And I want to give you an honest answer rather than a convenient one. A growing market does not automatically mean the right time to sell. And it does not automatically mean the wrong time either. The answer depends far more on where you are in your own cycle and where the market is. Let me explain what I mean. A hospitality business that is growing strongly, occupancy up, forward bookings up, solid revenue tracking well, may actually be better served by continuing to trade for another 2 to 3 years before going to market. Here is why. Buyers value hospitality businesses on EBITDA, earnings before interest, tax, depreciation, and amortization. And they want to see that figure presented cleanly across a 3 to 5 years. A single strong year with no supporting trend tells a buyer very little. 3 to 5 years of consistent growing, self-documented earnings tells a buyer everything they need to be confident and make a premium offer. If you are in a growth phase right now, these additional years of trading may add more to your eventual sale price than any premium a buoyant market sentiment could add today. The compounding effect of documented earnings growth is real and significant. On the other hand, this is equally important if you are approaching the natural limits of what you can extract from your operation. The picture is different. Whether that is your own energy and appetite for the business, the physical capacity of the property, the depth of your local market, or simply the fact that you have built this to a logical peak, then selling now while trading conditions are generally supportive and buyer appetite is strong and diverse is a very legitimate and intelligent strategy. The worst outcome in any market, growing or otherwise, is an owner who waits too long and then sells under pressure, which I see plenty of times, which I've covered in other videos. This is when value gets left behind. So the question is not simply, is the market good? The question is where I am in the cycle and what does it tell me about my optimal timing? This is a conversation worth having with someone who understands both the hospitality sector and the commercial dimensions of a business transaction. And is a conversation worth having well before you feel any urgency to act. Understanding who is the buyer pool right now is just as important as understanding the macro data, because different buyers value your property differently. And knowing which buyer type your business is most likely to attract shapes everything about how you prepare and how you go to market. Right now, I'm seeing 4 distinct buyer types active in the hospitality and accommodation space. First, the lifestyle investor, motivated by a combination of income and personal use. They want a business that generates a realistic return, and ideally, say 5 to 7%, while also offering a quality of life that a corporate career or a purely passive investment never provided. They are attracted by operational simplicity, documented systems, established booking channels, low staff dependency, a business that clearly runs without owner being present every single day is significantly more attractive to this buyer than one where the owner is irreplaceable. If this buyer walks through your property and sees chaos without you, they would walk away. The second is an experienced operator, less interested in lifestyle appeal, more focused on EBITDA, occupancy rates, revenue per available room, and what business can deliver under professional management. For this buyer, the numbers are everything, and they need a clean, consistent, and presented across at least 3 years. They're looking for scale. If your financials are messy or your performance is inconsistent, the buyer will either discount heavily or disregard it entirely, rather the property's business for sale. Third is the sea change buyer. This is one of the most motivated buyer categories in the current market, and the tourism data tells you why. Older Australians are travelling to regional areas in disproportionate numbers. 60% of overnight trips of those 65 and over to regional destinations. The people most likely to buy a lifestyle hospitality business are also its primary customers. They know the sector from the guest side, and they want to be on the other side of the experience. The sea change buyer is typically in their 50s and 60s, has sold a business or accumulated equity, and is looking for a new chapter. They will pay for location, a story, and for a property that already has a reputation. And they often need more time, reassurance in the due diligence process than other buyer types. The fourth is the ecotourism experience-led buyer. This is an increasingly active and self-capitalized category, particularly for coastal and nature-based properties. They are looking for something irreplaceable, a beachfront position, within reach of the major city, a bush setting with genuine privacy, a working farm or wetland property within wildlife corridors, the kind of setting that cannot be manufactured. Arrivals from China are up 20% and from Taiwan 24%. And these visitors are disproportionately drawn to natural environment experiences. The ecotourism buyer understands this, and they are pricing it. Development approval for additional accommodation is highly attractive for this buyer type because it represents de-risked future income. A property that could grow from 8 cabins to 14 with approval already in hand is materially more valuable than the one where the approval still needs to be secured. The approval does years of council approval process work that a buyer would otherwise have to do it themselves. The owners who achieve the strongest result in a growing market are not the ones who simply wait for conditions to improve and then pick up the phone to an agent. They're the ones who use a strong trading period to build the foundation that a buyer will eventually pay a premium for. Let me give you 4 specific things worth doing now, regardless of whether your exit is 2 years away or 8. First, clean up your financials. This is the single most important problem. Common or transactions I see in hospitality businesses. A set of accounts that mixes personal and business expenses, one-off items that inflate a particular year, related party transactions that buyers accountant will query. These things do not just make due diligence uncomfortable. They invite lower offers and extended timelines. A buyer's accountant will normalize his figures, regardless, but when they have to do significant work to get to a clean EBITDA, it signals a risk. And risk gets priced in. 3 to 5 years of clean, well-presented, account-prepared financials are the single most reliable foundation for a premium sale outcome. Secondly, reduce your own indispensability. If the business relies on your personal presence, your relationships with key suppliers, the face in your dining room, your direct management of the booking calendar, your knowledge of who your regulars are, that dependency will be priced into every offer received. The lifestyle investor and the sea change buyer both need to believe the property can perform without you. The experienced operator needs to believe a professional management team can step up without a significant transition period. Start building systems, train staff, and documenting processes well before you feel any pressure to do so. Ask yourself this: if you took 2 weeks off without checking the phone, would the business hold its performance? If the honest answer is no, that is your most important project right now. Thirdly, tell your story clearly. Boutique accommodation and hospitality businesses are not sold purely on yield or EBITDA multiples. They are sold on narrative. What makes this property unique? What kind of experience does it create for guests? Why do people return? What could a new owner build on what they've already created? Buyers who connect with that story are motivated buyers. Motivated buyers pay more and cause fewer problems in the process. The owners who document and articulate their property's identity, not just its financials, consistently achieve stronger outcomes. Understand your structure before you go to market. In this freehold, going concern property and businesses sold together as one transaction, is the business going concern a property and a business sold together or one transaction? Or does it make sense to separate the real estate from the operating business? The answer has significant implications for which buyer type you attract, how due diligence is structured, and ultimately what price you achieve. Getting that structural decision now with proper advice well before you engage an agent is one of the highest leverage things you can do in the years leading up to your exit. $197.9 billion in annual tourism spent. New South Wales with the largest increase in domestic overnight spend of any state. International arrivals growing at 10%, with strong recovery from Asia-Pacific markets. Forward forecasts pointing to $233 billion by 2030. The tailwind of Australian hospitality and accommodation is real, sustained and data supported. But the tailwind only helps if your sales are not set correctly. The owners who will achieve the strongest results from this environment over the next 3 to 10 years are the ones doing their preparation right now. Clean financials, reduced owner dependency, a clear story, and well-considered exit structure. If any of what I've covered today has raised a question about your own situation, your timing, your financials, your property position, or what a transition might look like, I'm genuinely glad to have that conversation. No obligation, just direct, experienced discussion between people who are serious about getting this right. I work specifically with hospitality and accommodation owners across New South Wales and nationally through Australian leisure property, pubs, hotels, restaurants, accommodation, caravan parks, coastal retreats. These transitions are the work I do. The link to take that 5-minute business transition readiness test is in the description below. It will give you a clear sense of where you stand and what deserves your attention before you go to market. I look forward to your comments, and please subscribe to this channel for more videos like this on staying up to date with industry.